What are the changes to the PPP program that'll benefit self-employed individuals, gig workers, and other small businesses? In this video, I'm going to cover what are the new rules, who can apply, what's the new calculation, and what's the max loan amount that you can take under this program based on the new calculation. The changes that were proposed last week were actually implemented this week. These rules will allow individuals who file a Form 1040 with a Schedule C or a 1099 contractor to calculate their maximum loan amount using their gross income. This also removes the eligibility restriction that prevents businesses whose owners have non-financial felonies to apply. And also it removes the eligibility restriction that prevents anyone who is delinquent on a federal student loan from applying for the program. On March 27th of 2020, the CARES Act was passed. In it, it provided PPP funds, which were payroll protection to allow businesses who were shut down to continue to pay their employees. Back in December, the Economic Aid Act reauthorized additional draws for second rounds of PPP money. These changes will apply to both first draw PPP loans and second draw PPP loans. There's an immediate effective date which will allow the SBA the maximum amount of time in order to process these applications and also give the lenders time to implement whatever controls they need to. Under the prior rules, many of these borrowers may not have received meaningful amounts of money to support their own employment due to the fact of having small profits. The government believes that allowing a borrower to receive a loan based on gross business income will provide the borrower with a loan amount significant to meet the borrower's needs. These will help with their fixed expenses, and the government believes that this is necessary to keep these businesses afloat. Quick caveat, these rules are only affecting the applications from this point on. If you are a borrower whose PPP loan has already been approved and processed before this effective date, then these will not apply to you. Now, they haven't come out and said, oh, we're gonna change anything or grandfather or redo, but I would imagine any of the applicants that applied that had either a negative income or could not show supporting documentation to get a loan were probably either denied or ineligible the first round, so hopefully they can get in the second round, or I should say a first round for them. But they haven't come out with any other rules saying how they're going to address if you applied and only got a small loan the first time. So any of those old applications as of now cannot be based on the new formula. Now they're also trying to mitigate the risk of fraud by saying if a Schedule C filer elects to use the gross income of their Schedule C or 1099 whatever, that if it's over $150,000, that there's going to be extra scrutiny on those applications and you're going to have to provide additional information in order to prove that you need those funds. The new rules cap the use of gross income at $100,000, similar to the old program to where you couldn't pay more than any employee more than $100,000. This tells me that they're truly targeting your Uber driver, your Uber Eats, your DoorDash drivers, like those types of businesses where you're only one employee, so they're capping it at $100,000. You would essentially take the amount from line 7 of your Schedule C and divide it by 12. This will give you your monthly breakdown, and you're going to multiply that by 2.5 times. This is if you are in a quote-unquote normal business. If you're in the hardest hit and there's a list of those NIAS codes out there, then you would multiply that by 3.5 times. The max loan amount according to these rules cannot exceed $20,833. So as long as you're below that, you should be good to get the loan if you can show your gross revenues. Although this new rule was just released by the SBA, the lenders are getting the same information at the same time, so they probably have no idea how to handle these changes yet. The SBA will more than likely either have to release a new application or an amended application or new guidance on an existing application in order to address these new calculations. If the SBA releases a new application, I'll make sure I do a video on that, on how to apply, and if I get any new information in the future, I will let you know. Thanks for taking the time to watch the video. Hope it brought value. If you could do me a favor and hit that like button before you go, I'd appreciate it. And until next time, have a great day.